There is a specific moment in every blown account's history. It happens right before the disaster. You are staring at the charts. You see a setup forming, but this isn't just any setup. This is the setup you've been studying. Price is at a major daily support level. The RSI is oversold. There is a bullish engulfing candle on the 15-minute time frame, and it perfectly aligns with the Fibonacci retracement. You look at this chart, and a thought crosses your mind. A very quiet, very deadly thought. You say to yourself, "This is it. It has to go up. I know exactly what is going to happen next." Because you know what is going to happen, you decide that risking your normal 1% is a waste of time. This is a sure thing. This is a guaranteed winner. So you increase your lot size. You risk 5%. Hell, you risk 10%. You click buy. And within 3 minutes, the market drops straight through your support level like a bowling ball through wet paper, instantly wiping out weeks of hard work. Today, we are going to dissect the most dangerous belief in the entire trading industry. Inspired by the teachings of Mark Douglas, we are going to expose the illusion of certainty. We are going to break down why your brain desperately wants to predict the future, why the perfect setup is actually the most dangerous trap on the chart, and how to permanently reprogram your mind to trade in pure probabilities. If you have ever lost a massive amount of money on a trade because you were sure it was going to win, lock in. It's time to fix the glitch in your system. Chapter 1. The Illusion of Certainty. Why do we want to be certain? Because uncertainty feels like danger. In your everyday life, certainty keeps you alive. You know for a certainty that if you step out in front of a speeding bus, you will get hit. You know that if you drop a glass on a tile floor, it will break. Your brain is a prediction machine. It gathers data, recognizes a pattern, and predicts the outcome to keep you safe. So, when you bring that exact same prediction machine to the financial markets, it tries to do the exact same job. It looks at a head and shoulders pattern, gathers the data, and says, "Aha, I have seen this before. I know what happens next." But here is the brutal, unforgiving truth of trading. The market defies the physical laws of your everyday life. In the real world, patterns guarantee outcomes. In the market, patterns only guarantee possibilities. Mark Douglas made this very clear. You can look at a chart and see a pattern that is played out perfectly 10 times in a row, but on the 11th time, there could be a massive institutional hedge fund in London that suddenly needs to liquidate $1 billion of that exact asset to cover a margin call. Does that hedge fund care about your Fibonacci level? Do they care about your RSI? No. They dump the volume into the market and your guaranteed setup is instantly destroyed. If you believe you know what is going to happen next, you are operating under an illusion, and the market loves to bankrupt people who operate in illusions. Chapter 2. The Betrayal of the Market. When you trade with the illusion of certainty, you set yourself up for a psychological collapse called market betrayal. Let's go back to that trader who risks 10% on the perfect setup. When that trade starts going into drawdown, how do they react? They don't react like a professional who just experienced a normal statistical loss. They react like someone whose best friend just stole their wallet. They feel betrayed. They get angry at the screen. They say, "How could it do this? It broke the rules. It was supposed to bounce." Because you know what is going to happen, you physically cannot process information that contradicts your belief. This is why you refuse to close a losing trade. The chart is screaming at you that the trend has reversed. The red candles are massive, but your brain literally blocks out that information because accepting it would mean admitting that your certainty was a lie. So you hold on to the loser. You move your stop loss. You enter a state of denial, praying for a reversal that is never coming. You didn't blow your account because your strategy was bad. You blew your account because you demanded certainty from an environment that is mathematically incapable of providing it. Chapter 3. The System Administrator Mindset. To fix this dangerous belief, we need to completely change how you view risk. I want you to stop thinking like a gambler and start thinking like an IT systems administrator managing a massive global network server. When a professional IT engineer sets up a sprawling network infrastructure, they do not sit at their desk and pray that the servers never crash. They do not say, "I built this perfectly, therefore I am absolutely certain no hardware will ever fail." That is amateur thinking. A professional engineer builds the system fully expecting it to fail. They know that eventually a power grid will go down, a cooling fan will break, or a piece of code will glitch. Because they accept the probability of failure, they build automated redundancies. They build firewalls. They set up backup servers that instantly kick in the millisecond the primary server drops. They don't predict the future. They build a system that survives any possible future. As a trader, you are the systems administrator of your capital. You cannot predict if your next trade is going to hit a massive spike in volatility or a sudden news event, but you can build automated protocols. Your stop loss is your firewall. Your 1% risk limit is your redundancy protocol. If you are risking 10% on a single trade because you are certain it was going to win, you are running a multi-million-dollar network without a firewall, hoping it never gets hacked. It is operational negligence. You do not need to know what the market will do next to make money. You only need to know what you will do next when the market does whatever it wants. Chapter 4. The 5 Fundamental Truths of Trading. Mark Douglas gave us the 5 fundamental truths of trading. I want you to write these down and read them every single morning before you open your charts. Truth number 1. Anything can happen. The market is infinitely deep. A single headline can reverse a weekly trend in 4 seconds. Truth number 2. You don't need to know what is going to happen next to make money. Casinos don't know the outcome of the next hand of blackjack, but they make billions of dollars a year. They rely on the math, not predictions. Truth number 3. There is a random distribution between wins and losses for any given set of variables that define an edge. If you take 20 trades, you might have 12 wins and 8 losses, but you have absolutely no idea what order those wins and losses will come in. The next trade could always be one of the 8 losses. Truth number 4. An edge is nothing more than an indication of a higher probability of one thing happening over another. Your strategy is not a crystal ball. It is just a slight mathematical tilt in your favor. Truth number 5. Every moment in the market is unique. Even if the chart looks exactly like it did yesterday, the institutional algorithms and the millions of traders interacting with that chart right now are completely different. The outcome will be unique. Chapter 5. The Surrender Protocol. The ultimate goal of a professional trader is completely surrendering the need to be right. When you place a trade, you are not making a prediction. You are simply executing a hypothesis based on probability. If I asked you to reach into a bag that has 60 green marbles and 40 red marbles and pull one out blindfolded, you know there is a higher probability of grabbing a green one. But if you reach in and pull out a red one, do you get angry at the bag? Do you feel betrayed by the marbles? No, you knew the red marbles were in there. You accepted the risk before your hand ever went into the bag. This is the surrender protocol. Before you click buy or sell, you must look at the risk amount on your screen and mentally surrender that money to the market. You must accept that the trade is essentially already a loss the second you enter it. If you cannot emotionally accept that loss before the trade even begins, you are still operating under the illusion of certainty and your position size is too big. Surrender the outcome. Execute the edge. Let the math do the heavy lifting. The most dangerous belief you can hold in this industry is thinking you are smarter than the market. The market is a chaotic, flowing river of human emotion and institutional liquidity. You cannot predict it. You cannot control it. And the second you think you have it figured out, it will take every dollar in your account to remind you who is actually in charge. Stop trying to predict the future. Start acting like a systems administrator. Build your firewalls, accept the randomness, and completely surrender your need to be right. If this masterclass shattered a dangerous illusion for you today, hit that subscribe button. Join our community. We don't predict,
we react, and we manage risk. Leave a comment below right now. What is the biggest percentage of your account you ever risked on a single trade because you were certain it was going to win? Let's expose the mistakes and learn from them. See you in the next one. Stay disciplined.